To be here.
You, you've been doing some client calls, really looking at three basic scenarios for election outcomes. And we'll talk about uncertainty and resolution of the race or the vote later on. But can you talk about those three buckets and how the odds have changed over the past week?
So we've looked at three buckets. We've looked at the blue wave, we've looked at the status quo, and then we've looked at a Biden presidency with a split Congress where the Republicans would still retain the Senate. And what we have been seeing, even before the positive COVID test for President Trump, was that after the debates, Biden's ratings have been improving. And for the last 2 months, we've really seen stable to improving ratings for Biden. So where I see the biggest changes are actually on the Senate side, which look like more of a toss-up. And we are seeing here that Democrats are gaining momentum. That's very important for how the market will view the prospects for tax increases, new taxes, or rolling back some of the tax cuts. And I think that the focus right now is on the Senate race. It's also on what will happen with the fiscal package, because the negotiations have really been between Mnuchin and Pelosi. We haven't really seen Mitch McConnell enter into those discussions yet. So I think that under the blue wave, there are concerns about what will happen in the first 100 days. Will we see a rollback on some of the tax cuts? Will we see just how are they going to fund this $2 trillion of infrastructure spending? Under the status quo, it would be more of the same. But I think we're seeing the real shifts are in the Senate races right now, and all eyes will be on the vice presidential debate later this week as well.
Right. How much do you think, the tax issue gets mentioned in financial media all the time. How much is offset by what you may expect under a blue wave in terms of more fiscal spending and fewer tariffs? Or is there an offset on that front?
There's definitely an offset. So there's two offsets. There's the proposal to raise the minimum wage, and there's the infrastructure spending. So our U.S. equity strategists have basically modeled this and see that rolling back 50% of the tax reduction would take about $9 off of EPS. But this is actually something that's quite manageable when you look at the offsets and you consider that the tariffs cumulatively over time probably took $10 to $12 off of EPS. So we don't think this is that negative for the equity markets. We're comfortable keeping the 3,600, for the target for the S&P 500. And we do think over the longer term, you will see more of a rotation into some of the value plays going forward, materials, consumer discretionary, also some of the ESG plays as well. So I would not be so negative on what a blue wave would bring, but I think you're going to see more discussion of that because as the polls have widened, there's less concerns over the length of how long the election result could be contested. And that had really been one of the key concerns, a week or so back.
Joyce, we can't know what's going to happen on election night, what's going to happen afterward. And there's going to be a lot of money that's going to move in the next 29 days before we know. So given the recent sideways action that we've seen in the markets, are you telling clients to hold off on any big directional moves between now and then? Do you think everyone should just stay put?
Well, we are telling clients that they should put on hedges because what we did see during the S&P 500 correction that we went through was that some of the traditional safe haven hedges really just didn't work. There's no yield that's left in treasuries. Gold didn't work as well. And what was actually quite effective was some of the FX vol screens and some of the FX trades, being long yen. Now, some of the things that people have wondered, will they actually be good hedges? Bitcoin, that didn't work as well. So we're not saying to change overall direction, but we are saying that you should put on some hedges, some puts on the S&P 500, some FX hedges as well, and beware some of these traditional hedges because they really haven't proven that effective this time.
Shepard Smith here. Thanks for watching CNBC on YouTube.